Good morning. Welcome to the B.F. Anderson Technical Report for July the 2nd. What I have here is a recent study done by American Association of Individual Investors, basically showing that there's still a lot of pessimism out there. The most recent survey says basically that optimism declined to its lowest level and pessimism rose to its highest level in 6 weeks. Bullish sentiment remains at an unusually low level, and bearish sentiment remains at an unusually high level. So what this really boils down to is that the market climbs a wall of worry. And when everybody's negative, that means there's a lot of cash on the sidelines, which could mean a continuation of the bull market. So we keep an eye on sentiment. It is a secondary indicator, but important. Now, as we look at the graphs, the NASDAQ continues to be the strongest index. In fact, it's again approaching an all-time new high, over 10,000. As you can see, the moving averages are very steady. This is a bull market look and continues to look well. Now, if we jump to a weekly read, we know that the 35-week moving average is important. And I'm going to talk a little bit about moving averages for a second. Moving averages basically just simplify the process. It takes all the wiggles out and gives you more of a trend reading versus a day-to-day reading. Moving averages are very important. You should learn about them. But anyway, 35-week moving average in an uptrend. The weekly indicator is again positive. Now, as we look at a longer-term indicator, this is the 10-month moving average versus the 20-month moving average, which we've been using for years, has been an excellent way to determine long-term trends. Well, the long-term trend for the market right now is excellent, no problem whatsoever. This is the S&P 500. Then you go to the NASDAQ, you can see again the super-duper strength of the NASDAQ. Again, the trend is very positive. Then we go to China, which is we're using as our proxy for China. We're using the Invesco Golden Dragon China ETF, which is all the Chinese stocks that trade here in the United States. And it does look like the Chinese markets are starting to improve. The aggression index, again, this is a ratio where we're measuring, NASDAQ versus consumer staples. In other words, how aggressive are investors being? And they're being quite aggressive, all-time new high. Moving averages in a strong uptrend. We just ended one of the best quarters in history, actually, going back to the 90s. This is the same ratio, but we're looking at it on a weekly basis. Now, this is the actual indicator, which is the lower moving average, which is a 40-week moving average. For this indicator to be positive, the ratio must be above the 40-week moving average, and that moving average needs to be turning up. So it's clearly on a buy signal. Now we're looking at some economic indicators. Now I made some changes recently. I had mentioned that I was going to eliminate the small cap index, which I have done. But first of all, you can see this is the 200-day moving average, which is an important moving average. Interest rates are moving sideways, very flat, no activity there. The price of oil continues to flounder, just moving sideways, not getting above that 200-day moving average. And also notice that the 200-day moving average is in a downtrend. Now, just so that you know, our 1020 indicator, which is the monthly indicator that we just discussed, that gave a sell signal on oil in January of 2014. So we were basically negative on oil for the last 6 years, which has really been a pretty good move. Now, this is another indicator that we're adding here. This is the volatility index. This is the VIX. We're going to talk a little bit more about the VIX in the video, but you can see here that around the time of the coronavirus bottom, when the volatility went up dramatically. And you can see it's starting to improve. In fact, it's stabilizing. This is what normal volatility looks like back here. Extreme high volatility, and then we're starting to see a normalization. This is, again, the 200-day. It would be good to get that down here, and we would be back to normal times on volatility. Now, the put-call ratio continues to be, in my opinion, too hot. But the problem with these indicators is that you can stay hot for a long time or you can stay cold for a long time. But what would be nice to see is if we could just get back into this normal range. So again, what I would emphasize is that if you have some stocks in your portfolio that just are not acting right, this would be a good time to reevaluate. Now, here's the S&P 500 index. We're using the 25-day moving average and the 50-day moving average. You can see that, a very solid uptrend, really no problem. Now, we also look at the 200-day moving average on the S&P. We're back above it. We're holding it. It's acting as support and looks constructive. This is the number of new lows on the New York Stock Exchange. Again, very low numbers, no problem here at all. We start seeing like 40 or 50 a day. That would be reason for concern, but we're not seeing that. Now, I wanted to mention, we had dropped off the small cap indexes, but one of the indexes that I think is important is the Value Line Geometric Index. Now, this is an equally weighted index, meaning that every stock in the index, which is 1,700 stocks, is a very broad index, and every stock is equally weighted because of the way the index is structured. So the point I'm making here is that this particular index has really been doing poorly, just like the small caps have been doing poorly. But it's really pointing out that the market is very discriminating right now. I really don't think broad diversification is going to work to your benefit at this point. I think that you've got to be more of a stock picker, and you're going to have to pick the right stocks. And I believe this index is pretty much showing that. Now, back to the VIX. This is, as I say here, it says, as it relates to investing, the only opinion about the virus that matters is the market's opinion. So we're seeing here, a tremendous jump in volatility starting to settle down, and you can see we get back into normalcy down in here, but it is telling you that things are improving. So the best time to buy stocks is when things are terrible but improving. Now, I wanted to also talk a little bit more about the virus because there are certain ways that we can evaluate what's going on. If there's a vaccine, we're going to probably see it in the market. If there's a second wave, we're probably going to see it. So the one stock that I wanted to talk about here is Disney, and it's basically announcing that they're going to have to, shut down their parks, and the employees don't even want to go to work because they're concerned about the virus. So let's look at the chart. You can see here, we've got here the 50-day moving average and the 10-day moving average. Again, this is just looking like, we get the big drop on the 23rd of March. We're starting to see some improvement, however, kind of rolling over. Really would like to see this rally up into this zone here or start moving upward. However, if it breaks down and makes new lows, I think that's going to be an indication of a second wave. However, if it breaks out to the upside, I think that's going to be the indication of a vaccine or a treatment. Boeing, same thing. I mean, we've been talking about the airline stocks and the cruise line stocks. You can see here Boeing, the same thing. Now, Boeing's had a lot of problems other than the virus. But again, just like Disney, if it continued to hold in here and then rally, that would be a very positive sign for the virus. Now, here is Novavax. Novavax was featured on Sunday morning, on CBS Sunday Morning this last Sunday, and basically they claim to have a vaccine. Now, the stock has broken out above 20 and ran all the way up to basically 90, so they must have something. And the point of the story is that Novavax, along with Pfizer, Johnson & Johnson, these companies are all in different phase trials of their vaccines. Something is probably going to happen. All right, now we're also talking about the top 5 here, and Novavax is in the top 5. Here's Tesla. Tesla has broken out in a meaningful way. We got somewhat of a volume signature down here. As of this morning, Tesla in pre-opening prices is over $1,200 a share, and basically they're exceeding delivery estimates. Tesla is going to be potentially a new form of energy that replaces the internal combustion engine. This is another energy company that's interesting. Now, I'd have to say, now, by the way, we do own Tesla. We don't own Novavax. It's just, I don't know, I'm just a little afraid of it. But Plug Power, this is a very risky stock. I've known about this company for a long time. They are into hydrogen fuel cells. And we know about these other companies that are coming out with 18-wheelers that are running on hydrogen. This is interesting. We should keep an eye on it. Fastly, this is a technology stock that improves the performance of the internet, continue to be in a very strong uptrend. Dexcom, which is involved in diabetes treatments, mainly equipment to measure your glucose levels, acting well. So all in all, the market is looking pretty darn fantastic, and we would recommend that you would be fully invested here. However, do clean up those weak positions. Let me know if you have any questions. Thank you very much.